Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking interest rates, let's talk about the 5-year note. 5-year note, 113.02 3/4 on the close, which was virtually unchanged, but we remain at that 9-year high in yield. More important than the actual lack of movement today, the 5-year note held its over 9-year high. Now, I called it a 9-year high, but it's actually 9 years and 9 months. You're talking all the way back to October of 2008 since we've seen this 2.83 yield on the 5-year note. 2-year note auction yesterday was pretty strong. 2-year note also high since 2008 on the yield side of things. Don't have the same situation with the 10-year and the 30-year, or that not often talked about 20-year. But those are at recent highs. They're just not at this massive highs that show the short end of the curve moving. Obviously, the 5-year, 2-year dominated somewhat by the moves and the comments from the Federal Reserve, pushing up that ultra short end, which also helps to push up the yields on the medium term part of the curve. But the yield curve actually has steepened since Friday to about 32 basis points on the 10s versus 2s, which was at 28 basis points as of Friday. Now, a lot of it having to do with the trade talks. Both NAFTA and the EU-US talks began today, and President Trump earlier tweeted that they do have an agreement. Him and Jean-Claude Juncker met, and he claims that they've come to a verbal agreement. So that's going to help keep yields a little bit higher, push yields a little bit higher. It's the optimism on those trade talks, along with Mexico and Canada being committed to a trilateral deal. That commitment to any sort of deal also very positive, possibly pushing economies back into that sort of synchronized global growth story, which could push all yields higher if the economic growth is considered to be stable, which it has not been considered as of late. And then the dollar was weaker off that same story, slightly weaker, signals more optimism on those trade talks, keeping again yields on the high end, especially on the short end of the curve, where Powell last week, and that's president of the U.S. Fed, chairman rather, of the U.S. Fed, talking about keeping their pattern or their path of rate hikes in place. That is much more important to the short end of the curve, which consists of the 2-year and 5-year in terms of the interest rate contracts here at the CME. This is Bob Iaccino talking interest rate futures from the CME Group trading floor in Chicago.